Larry Tentarelli.
Dale, good morning.
How are you, buddy? Good to
Good,
have
my
you
friend.
back.
How are you?
Doing okay. So, we had some interesting action the last couple of weeks. Wondering what's on your radar. If you, like a lot of people are, some people were looking for a relief rally. Do you think that's all it is, Larry?
I think we're definitely in a bear market rally. I think
Okay.
it's got the potential to turn into more, but right now, the way that I'm treating it is as a bear market rally, and then if it grows into more, that's great. But I've definitely been buying it and increasing my long side.
Okay, let's see your screen and what you're allocating funds to. We were having a discussion here that Microsoft had bad earnings and that the old game of MAG and FANG is done, and there's going to be new leadership. Even in a bear market rally, those aren't going to be the ones that outperform like they used to. Does that resonate with you?
Yes, I agree with that. So, Will, you can see my screen, right?
Yeah, got it up here,
So
buddy.
the first thing that what's
10
driving the
years.
markets right now is bond yields and the US dollar.
Yeah.
So what happens with bonds and what happens with US dollar determines everything else in the markets right now. So if you take a look at this chart, this is 10-year treasury yields is the red and black hash mark, and then the solid black line is the S&P 500 overlay. So you can see
Right.
it's been simple. Yields broke out the beginning of the year, stocks went down. They had a little bit of a top in June. Markets put in a low. Yields turned higher. S&P went lower. Now on Friday was a big
The
day
world
because
changed.
the Fed, they didn't make a pivot, but I think they saw something in the FX market with the dollar yen that
They wanted
scared
to
them.
help BOJ out.
Yeah. Yeah. So you see yields were 433 Friday morning. Wall Street Journal put out that softball article, and then I think they closed down about 10 basis points that day. Since then, 433, 406, and the S&P's up 200 points in 3 days. So what happens here is going to determine, for the most part, what happens here. Earnings in the short term, you'll see some volatility today with Microsoft, but what happens with bond yields drives the market right now.
Can I ask you a hypothetical? I know it's really not your style. You
Sure.
trade what's in front of you, but
Yeah.
say, for example, we trade under 3.5 and we head down towards the 3% level. What do you
On
think
bond
that would?
yields?
Yeah, 10-year gets down to 3%. Where would
Oh,
that
yeah.
take S&Ps?
It depends how fast it happens and why it happens. So if it happens quickly because some really weak CPI numbers or inflation numbers come out,
Yeah.
then I think S&P goes straight up. If it takes a little bit longer and it's due to a softer economy or a slowdown, I think it still helps the S&P, but not as fast as if it's caused by inflation dropping.
Great point. That's a pearl.
Yeah.
So it's not that it drops, it's for what reason it drops.
Right.
So really nice differentiation there, Larry.
Yeah, thank you. So if we get, I look at this inflation number every single day from the Cleveland Fed, and they're still up at like 814 or 811 right now. If for some reason those inflation numbers come down a lot and you see bond yields drop sharply, I think S&P goes straight up. But I still think it's going to be choppy in the near term. I do agree that I don't think FANG is going to lead us out of it. I don't think Microsoft, Google, maybe Apple, that's been holding up a little bit better. But, the energy stocks, the materials.
Still look great.
Yeah, the material stocks. So if we dial up energy, I'm going to take this off my screen for a second. So if we dial up XLE, now XLE's been choppy with crude oil, but there's a big difference between the energy sector stocks, which I think, based on the way that they've set up their cost structure, I think as long as crude oil is over about 45 to 55, they're making money.
I'm looking for 108.
In crude?
Yeah, WTI.
Yeah, 108 and WTI, I think would send these stocks much higher. I like Occidental right here.
Yeah.
Very nice wide base, 2050 SMA cross. Looks like it's ready to break out higher. ExxonMobil, just the whole group in energy. I think what happened with WTI is when OPEC had that 2 million barrel per day supply cut, I think that was right about here. I think they really put a floor in the crude oil market, and they put shorts on notice that at any time, they can just pull back on supply, and you get that big short rally.
And
so
that Biden dump, that last dump was the low that you have there at 8130. We were talking about here in F.A.C.E to fade Biden on the SPR release.
Anyway. I had been bearish on crude oil through here because I figured that all this central bank tightening, would put pressure on it. And I've got some longer dated December USO puts, small position, but I really think that OPEC put a floor in here, and I think that helps the energy stocks quite a bit.
Yeah. What else are you buying in here, Larry?
I like these material stocks. So if we take a look at the metals, Freeport. I put Freeport on our list a couple days ago.
That
Freeport, really nice wide base down here.
Yeah.
Reported earnings, a lot of volume came in last week after earnings, and I use the moving averages a lot. And when I see something like this, where this 100-day moving average has put a top on Freeport since April, and then you get a high volume move through it, I think that chart set up very, very well,
36.
right where it is.
Yeah,
I like that. Tech Resources is always a favorite.
What do they do?
Tech Resources, they're out of Canada. They're in the metals and mining business.
Okay, they sell the picks and shovels.
No, they actually do the mining. They do the mining themselves. They're a miner. But they're into, they mine everything, whether it's coal or gold or steel, whatever it is. But very, very nice chart.
Yeah. Okay.
XME I've got a position here in the ETF space. And what I do around earnings, because you've got about 420 large caps reporting earnings in the next 2 weeks.
Yeah.
Around earnings, often I'll focus a little bit more on the ETFs, just so you don't get that, 10% shakeout. But XME, I think CF Industries looks great.
Yeah.
They're in fertilizer. So you're seeing a lot of these.
Yeah. Commodities come back.
Yeah. A lot of these material stocks. Corteva is in the same business. That's got a nice uptrend. In the industrials, Deere.
I saw Cameco got hammered, but and it's recovered. Anything in the uranium stocks besides, what was that, an earnings miss?
I don't do anything with the uranium stocks. You know what it is they're really difficult on my stops.
Okay. Yeah, because they're thin.
Yeah, if you look at a chart like that, it can be
not enough liquidity for the
it can just be hit or miss. The same thing with the coal stocks. So AMR, that's got a very nice trend that's working right now. So I really think, based on what I'm still seeing, materials, energy, the commodities, some of the healthcare stocks have been super strong.
They've been going up all along. They've held. That was like a defensive thing for people.
Yeah.
Right.
Yeah. They're
getting better.
Well, you know what it is? They're defensive, but they've got some earnings growth as well, because even if we go into a recession, healthcare, people don't really dial back on healthcare because the economy is bad.
Okay.
Go
ahead.
No, I was going to say that, they might not buy a new car, but if somebody has to go to the hospital, they're going to go to the hospital and get their prescriptions.
A lot of they're talking a little bit about some type of credit crisis. People are walking away from their cars. That the way they were selling them to people, There were a lot of people that had $1,000, $1,200, $1,300 monthly payments for their car.
Yeah.
So between your car and your house, so that was equal to what their mortgage payment was if they were locked in under 3%.
Oh,
So
sure.
so much for the car market being tight.
Yeah, I'm not a fan of anything right now that has to do with consumer finance, and especially not subprime
Yeah,
consumer finance, because
yeah.
I think
There's good. Yeah,
we'll definitely get an economic slowdown. I'm not going to try to call a recession or not, because that's not what I do. But
yeah.
higher inflation, higher food prices, higher gas, and higher interest rates is going to put the squeeze on a lot of people. And I just think that anything that has to do with consumer finance, especially subprime, I got to tell you what, I don't like the home construction group, but I've got to say this
Yeah, I was
is,
talking about that earlier, that the home builders look like they're coming out of the hole.
they do. And I think, and that surprises me.
Everyone's so bearish on real estate, and it's really a play on yields here.
It's exactly a play on yields. And I think part of what's holding up the real estate market is the same thing that's holding up inflation. Is rent is 33%, I believe, of CPI.
Yeah. Yeah.
And with everybody working from home, my wife and I both work from home, and that changed after COVID. And I know a lot of people that work from home, and a lot of these Fortune 500 companies, they were going to bring people back, and they had to, cave in and dial it back. And I think that's why the real estate market's held up, is a lot of people still work from home.
Yeah. Yeah, I sometimes I don't know what bathrobe to wear.
Yeah. Now, I will say this. In tech, I do think that the new leaders won't be the old leaders. So, Microsoft, Google, Amazon, Apple, they're not going to go away. But if
what
you
does
take a look-
Roblox do? I know a guy I work with. He's long this stock. What do they do?
Well, they're big, so they're into online gaming. But what their big angle is they're like the first mover in this whole metaverse industry shift.
Okay. Yeah.
And they've got big corporate partnerships with Nike, I think with Pepsi. And if you take a look at that chart, so I put this on our buy list this weekend, because last week it reclaimed the 40-week moving average for the first time going back to January. It closed over the 200-day yesterday, and they guided higher for the coming quarter, so it had a really high volume move. But
left a gap and didn't even fill it, did it?
Yeah, it didn't fill it. But if you look at all the
bullish.
high volume bars that are on the screen, right?
Yeah.
This stock, you've got Google and Microsoft. They recently made new lows, and the semiconductors are down here. This stock is up quite a bit. And that I think that's going to be one of your new leaders in tech.
How many positions do you have on, Larry, in different issues?
Right now, I'm very small right now. I've got 4 open long positions, and I've got some S&P 500 puts and some crude oil puts to cover me in case things get bad into December. Okay. But I'm pretty small right now. I've only got 4 open long positions.
Okay. Some great looking charts. We were talking about consumer debt. What about corporate debt? I mean, these guys borrowed heavy a couple of years ago when rates were low, and they used it for financial engineering, nothing for, as far as new facilities or invest in the business. It was invest in the stock market because that's how they get paid. And when they have to roll that, it's going to be like triple of what their finance costs were. I know LQD and junk held up better than treasuries, which I found kind of amazing, and kind of a shift that the flight to quality is no longer treasuries. It's, HYG and LQD. They held
Yeah.
up much better than treasuries. Yeah. Oh, you have an island yesterday in
Yeah.
TLT.
Yeah.
What do you think? They're going to have problems rolling debt. Someone told me that most of it's not going to have to roll for a couple of years. But that's going to be a bridge too far for people that, especially if we're in a recession. There could be a lot of solvency issues down the road there.
I don't follow the bond market too closely, but I do think you're right. I think that, I think your AAA rated companies and your, companies that have a ton of capital and they just borrowed money because money was so cheap, I think they'll be fine. But when you get into these, these junk rated companies or companies that are highly levered, if they need to roll that debt to keep things going, then yeah, they could feel the squeeze.
Okay. We still have some time if you want to show us anything else. We've had some great looks from you, Larry.
Yeah, thank you. Couple other charts. So the first thing, going back to bond yields are in a really strong breakout move. Obviously, I was surprised to see. I thought 4% might have been the top. It failed here, but they've held that 20-day, and 4% is the first level, and then 380 is the second level. That I think we need to get below that. I think if bond yields stay over 4%, then I think it's still a little bit of tug and war for the S&P 500. Now the S&P, I do think that this reversal that we got, that was October 13. We all know that high volume reversal bar. So I think this was a real reversal. That CPI number came out. I had some shorts that I covered into that gap down. I'm sure there was a lot of people, that covered some shorts. But in the meantime, I do think this is a real reversal. As far as if this, turns into just a bear market rally and we get up, maybe to the 200-day, maybe to 4,100, somewhere in there. If we get there, we need to get past this 50-day. So it makes sense. The S&P is going to back off today, and then then it just comes down to really how the economic news comes in. I don't want to try to predict it. I do think that there's, some stuff in the economy that we need to work through. But at the end of the day, I don't want to predict. I will say that I think this is a buyable low right here. How long it lasts for, I don't know. So I've been smaller. I've been making some buys basically every single day, but it's been smaller. I'm just scaling in, trying to get into some pullbacks. But yes, I think we've got a rally. We'll just have to see how long it goes for.
I've noticed there still were plenty of hedge fund shorts. Goldman underinvested. A lot of they're really retail liquidations. I think we're pretty heavy in the last month. So I think a lot of people are worried about earnings, and they're going to be left in the dust on the sidelines here, buddy.
Yeah, I put out this report, and I'll drop this link in the chat for people. So I put out this report and video on Monday, and right now, according to Bank of America, their global fund manager survey, fund managers are the highest amount of cash they've had in the past 21 years. And you can see they're heavy overweight cash and they're heavy underweight stocks. So what happens is, you get into this year-end performance chasing.
Right.
If we get the seasonal rally, and then they just have to buy because everything. So I think there's a lot of firepower that's on the sidelines in the near term.
Larry Tentarelli, firepower for people that follow his work. That gives them firepower. So Larry could follow him at LMT978 on Twitter, and he just provided a link. And Larry, you're one of the better ones out there. And every time you come on, you give us actionable ideas instead of, well, this could happen, but if it does, then that would happen. And if it doesn't, then it won't. You know, that kind of analysis, you know, you hear it on CNBC a lot, but
yeah. Hey, they gotta hedge their bets, but yeah, you know, I think I'd like to see. Listen, it's been a tough year, unless you've been short all year. It's been a tough year for a lot of people.
It hasn't been easy to do that either.
No, it's not. None
know.
of. Listen, this year, Dale, I've been at this since 1998. This is the toughest year since 2008 because these moves, you know, just one way to the other are vicious. But maybe we get, you know, a little year-end rally to you know, pick things up a little bit.
Yeah. Someone just said, Larry, you're not your average two-handed economist.
Thank you.
And if you could post it one more time, Larry, before you say goodbye, someone's looking for the link, and hope you get some action.
Yeah, I put it in the chat box if people see the chat box, but all they have to do, just go to my website, bluechipdaily.com. And I've got it right there on the website. And what I'll do is I'm gonna put it in my Twitter profile as well, so people can see it there. But a lot of good stuff that's in that report. It took me about a week to put it together, but I think there's a lot that will help people.
Thank you so much, Larry, and for the offer and edifying the F.A.C.E community. My trading warrior brother, hope you have a great fall trading season, and talk to you down the road.
Dale, you too, my friend. Thank you for having me on, and I hope that everyone has a great holiday season as well.
All right. Larry Tentarelli, everybody, at LMT 978. And you could join the team in about, I don't know, 19 minutes. Larry, everyone's thanking you. And for the morning edge. So everyone, let's see, today is Wednesday. See everyone tomorrow. For Thursday. Anyway, thank you guys. Don't forget to try our trial and join our community. Blake and Steve won't be on vacation forever. And you know what? You go in that chat room right now, even when they're in Vegas, you're going to find people to support you and help you become better. And you have to surround yourself with traders better than yourself to get better. So definitely check out ForexAnalytix community for that. Okay, Michael, Richard, everyone, don't just count your pips, count your blessings. See you tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.